Hello, everyone. Welcome to our financially forward masterclass series for women. So, I'll do a recap first and then get into introduction, and then Poonam can start the session. So, we've done a module one on money basics and daily finance, where we covered smart swipes using debit and credit card and credit score. Then we did a decoding of a salary slip. Then we did a budgeting session. And then lastly, we did an emergency fund. And today we'll be starting a second module, which is based on savings and investment essentials. And I'm Smita, who will be hosting this session with Poonam. I'm a chartered accountant and coach. Let me hand it over to Poonam for her introduction and to begin the session.
Hello everyone, I am Poonam, a chartered accountant and educator and an educator. In the module one, we just created awareness about what that we should invest money in the different pockets, like it should be for emergency fund for the other funds. But where to invest the money, we will discuss in the module two, and there are various options to explore. And then there are various options to explore, but we won't cover all the things in one go. We in today's session we will just discuss around mutual funds and SIP only, and the rest we will cover in the upcoming session. And when we say that we should invest. So when the first thing investment comes, then investment means first thing comes to our mind. Generally, those who are earning from a long time that we should invest to get the deduction from the income tax. Because income tax encourages that. So income tax now the perspective has little changed because as you aware there are two parallel tax regime in India. The one is old tax regime, where we get the deduction based on the investment rate to a certain limit. That's threshold limit. If we make the investment to that extent, we will get the deduction. But now, what is reality in the this year, and upcoming years? That after even after getting the deduction, the exemption limit is so low that we generally, people have to opt for the new tax regime for the better tax clarity or to reduce their taxes burden. Now, in the new tax regime, there is no deduction at all allowed. All the investments that you made, they won't consider it. You need to pay taxes on your income. Now, when we need to pay taxes on income and investment, we don't get any deduction. I honestly believe that the investment is not just for the deduction purpose, it's for our own bigger future growth. So investment can be short term or the long term. And generally, we see from the long term, saving is for short term and investment is for the bigger term. So today we will discuss around that out of the various options of investment, the two options that is the mutual fund and SIP, and we discussed around it. So with this, mutual fund and SIP, you all have heard. And Smita, would you share your thoughts on mutual funds and SIP?
Yeah, so for mutual fund, what I'll try to explain it in like a minimal language or a simple terms. That is pooling money from various investors and investing it in like stocks, bonds, or securities. And who does this? Basically, a fund manager. Fund manager does this investment in various like instruments so that your money is growing basically. So that's what mutual fund is basically to in layman's term. And for a mutual fund, there can be two kinds of way you can invest in the mutual fund. One is your SIP, or which is called SIP also. That is systematic investment plan. So the a minimum of 500 rupees you can start in that. And another one is if you have a lump sum amount, like you've got something from a gift from your relatives or parents, or you've got something from bonus, you can invest that lump sum also into this. So there are two options of doing it. So yeah.
So mutual funds, uh, as you explained, what is an SIP. So we generally there are three types of mutual funds. So would you like to share about that so that we all are on the same page? That's what are the broad categories of mutual funds?
Yeah, so Poonam, mutual funds, there are, you mentioned there are three, like you can say it's about equity. So equity funds are there, which are basically little riskier. This is long-term goals and basically for retirement, basically when you have a long-term vision. So it's better to invest in an equity fund. Then there is debt funds, but debt funds are known as you can call it as a parking fund, basically for where you have short-term needs and all. And another one is a combination of these two, that is called the hybrid fund. But there's also another category which is very popular nowadays. It is the index fund. So where it is like a UTI index fund, HDFC, there are various banks, they give you the index fund, which is Nifty 50. So that means you can invest in the top 50 companies of India. So if you invest there, there's certain amount which you're very sure of getting. So it's a very safe way of investing there if you're a beginner. So if you don't want to take much risk, then Nifty 50 is a very good one in whichever bank you take it. And there's another interesting thing, like we park our money, right, in savings account, Poonam. So how much
Yes.
do you think you get an interest? 4%, 6% max? So there's
No,
something.
saving lower than that. Saving generally bank provides in like 2 to 3% max, 3.5, except one or two banks, even much lower.
So if I tell you that the money you're parking on your savings account, you can park it onto a liquid account also.
Liquid mutual fund.
Yeah, liquid accounts. Yes, you can. So I'm just admitting, Shraddha. Yeah. So yeah, liquid mutual fund as well. So what happens there? What is the benefit? You know that one thing is there will be a rate of interest which is more than what you get in savings, but there is no exit load after 7 days.
Great.
So even instant redemption can happen. So for example, if you want, we were talking about emergency fund. Yeah, remember last week we were talking about it, or that last Monday, I suppose. So in that, what we had said that park your money in the emergency fund into the liquid fund. So any emergency you have, you can park it in the liquid funds. So you get more interest and you get no redemption load, and also you will not be tempted to withdraw. Like and a one arm distance, which I always say, this emergency fund should be at a one arm distance so that you do not misuse it, but at least when you need the most, it's available also.
Great. So we all are on same page that what's the mutual fund, SIP, and what are the various types of it. But we discussed that we don't get any tax exemption, but there are certain tax involved at the life of the mutual funds. May not be at the beginning of what. So what is the tax which is there associated with a mutual fund and when?
So Poonam, what I will say is getting into taxation of mutual fund is little complicated to understand, basically because you already mentioned that old tax regime is there, new tax regime is there, and it also depends upon the mutual fund taxation depends on couple of things, that the duration of it, how long are you holding it, if it's a holding period is there, the rate of interest is there, dividends are there, what kind of equity fund or debt fund, all of this categorization is there. And if it is if you're holding it for more than a certain period of time, it's called long term. So the gain happens only at the time of redemption. It's not when you're booking the mutual fund. So if it's getting matured or redeemed, what that is the word we use, redemption or a sale. And for example, you have an emergency, you're redeeming the fund, that is the time you need to check for the how many months you're holding it. If you're holding for a longer time, then you can attract a long time capital gain. And in that case, there's an amount, for example, I think 1,25,000 something, some amount is there. To that amount, it is not taxable. But if it is higher than that, there's a tax rate. And similarly for short-term capital gain also, there's a 15% bracket, 12.5. There's a change. It depends upon the tax slab is basically which framework it fits in, and accordingly a special rate of tax applies here, like 15%, 20%, like that. It's not taken in totality of the total income, but it's only when redemption happens. So yeah, so that you need to plan. So you should not be investing for the purpose of withdrawing it quickly, because if you withdraw it quickly, there might be gains, but in that gain can cost you something.
Mm.
So probably what we've talked so far is about a little bit about mutual funds, the types of mutual funds, whether you can do SIP, whether you can do lump sum, or also about the taxation bit. But taxation is only when you actually invest and when you're going to redeem, you can take a help from anybody. So this information is available in the internet also, the calculations, or you can even talk to a CA, or you can also refer to a lot of videos are also available on YouTube to actually understand in more depth. because at one go, if I explain, it might get complicated. That's why I'm just making it very simple and keeping it there. That invest properly, and only when you want to withdraw the money, look at the time when you're withdrawing. What could be the repercussions of it, whether you'll be taxed or not. Otherwise, you can be rest assured your money is growing.
Oh,
So, Poonam, so another thing I would want to know is why for a woman you think investing in mutual fund is important?
mutual fund is mutual fund is not only beneficial for women, it's beneficial for everybody, but especially for women because women are the housemakers since Asians and they always have the like it is associated that they save some money. And if they keep the money at home, it won't generate any interest on that. And more on that, due to inflation, that amount goes up. But if that small amount of money they invested somewhere, it will just start generating return on that amount. For example, in the older days, particularly in North India, what they do, our grandparents, grandmothers or so, they put a committee where they pool the amount and whosoever need the amount, they one person get the amount. But the concept is same. Here, you are parking some money for the future, but the intent is you get the interest on that. Plus, your amount is sure because it is your amount return is short and the return is relatively more than the saving bank account because it is managed by the fund manager. So it's very important that whatever savings they can make, even in small chunks, maybe 500, 1,000, whatever they can afford, they can manage. Sorry, they can manage rather. They can manage from their savings. They should invest it in mutual fund.
Hmm. And Poonam, I also want to know if do you track your mutual funds on a regular basis, or how frequently do you check it?
The frequency that personally, it is just like the health checkup. I get my annual health checkup once, that is just before paying the premium, and sometimes that's my friends get twice. So it depends that how we feel about our health. And if I just review the long-term investment, I do it once. But depending upon the scenario, we can do it, check it more regularly. For example, my salary increased, and with increase of salary, I think that I should make more investment in mutual funds so that I get better returns. I start putting more money. I start packing more money for the future. I start reviewing it. I manage it. Then, of course, for example, my long-term plans changed. For retirement, I need more money because I don't have the other sum of money. Then I can review it. Similarly, I got the lump sum amount. Then I just review and check. Yes, can I put it somewhere so that which fund of my previous fund is giving me the better return? Another could be a mutual fund. For example, while making the health checkup, I saw that a mutual fund which is performing very well from last few years, but it is not performing well. I need to make a review. Then in this case, I review. So the thing is, ideally, 6 months to year, we should check because it is managed by a efficient trust manager. But depending upon needs, and we can check it more regularly.
Hmm. So yeah, that's like an annual health checkup you do. You do your checkup for your mutual fund as well. Yeah. So, but I'm of a different opinion. So I normally monitor on a very regular basis, like what's happening in the because if Trump is coming, this in the rate is going here and there, inflation is there. So I'm somebody who watches very regularly, but I may not withdraw or redeem or anything that for that matter because mostly I'm a very what you call safe investor or somebody who doesn't want to get into the risk. So mostly my money I will put it in Nifty 50 or something like that, and so probably I will monitor the markets and all of those things on a very regular basis to understand. It's maybe weekly, maybe monthly, like that. I don't wait for another 6 months to pass by to let me know how the market is doing.
Maybe this is beneficial for you. Maybe you, in this way, would like to get the more research on the market, but the person that intent vary from person to person. Exactly. Because, for example, the person who is so busy and just want to invest 500 or 1,000, like me from my savings, and 1,000 there I'm parking, where I just see in a 6 months, that's my investment is getting me the desired results, it's okay. Let me focus on other things. But maybe your exploration will help you to search the market better and invest in other options as well.
Yeah. So, Poonam, I'll share another interesting thing from my personal life. So, you remember I had taken a sabbatical for travel, right? And
Right.
a year of travel. And in that travel, do you know what helped me fund my travel? It's not my savings or salary or anything. Whatever money I had deposited as SIP from my salary, which used to go, that helped me cover the entire 1 year's travel.
Oh, amazing, Smita.
So that's how I utilized it. And another interesting thing I'll tell you is that when I was, because I was withdrawing at the time, after I think 5 years I invested, and after the 5 years only I took it for my travel. But I had to stop my SIP as well because I was beginning to travel. So what I did was I could even stop my SIP. That it doesn't mean that if you started an SIP, you need to continue with it. You can stop it whenever you want it. And when you leave it at that point, also your fund is growing.
Okay.
Probably people think that that once you start an SIP, you can't stop it. It's not the case. You can. It's a myth that you can actually stop it as well whenever you need it.
Yes. Yes, even just like if we don't pay the policy premium, we get penalized. Our policy don't get renewed. But this is not true in case of SIP. In case of SIP, even if we do not pay certain installment and then start paying again, it will work perfectly because we get the return on the amount invested till that time. Smita,
Yeah.
that's all about we discussed that what the mutual fund is, where the types are, taxations, and all this. But actually, how one can start getting investing in mutual funds? Like if someone wants to start the mutual fund journey, so how one can start?
So in case somebody wants to start with mutual fund, the best is to start with 500. That is the minimal amount you need. You can look at the trend and see where you can invest. So to look at that, the trends and all, the best thing is to go for apps. I will suggest. Okay, so something like our banks, like our savings bank. You must be having a bank account in your specific bank account in your specific banks, like HDFC, SBI. These are the common names which I can say, ICICI. So when you have this banking, they also have apps that you can use it on mobile as well. You can actually start investing through them. So it is very easy platform to go and start. And they also have their funds. Similarly, there are platforms like you see Grow is there, Indie Money is there, which also shows you the portfolio of what you can put the information there, and there's safe options. Basically, Indie app is very safe, which I generally use. So it shows me the portfolio what I have. For example, if I have a car, if I have a jewelry, whatever information I feed in, it just shows me a portfolio of assets what is there for me and where I've invested, and I can just refresh it and see it, and I even connect it to my emails where all the transaction also getting linked. So I get a portfolio of information there, and according to my portfolio of assets and the kind of liquid money I have with me, it will suggest what I can do. And also you can in these that is what I've seen in Indie app. Similarly, there are Grow app. Grow app also tells you like if you want to invest in mutual funds, if you want to invest in gold funds, debt funds, equity funds, depending upon your needs, it is all in information is available as a trend. For example, what the return will be in 6 months, 1 year, 3 year, 5 year. It's a graph basically. If you can, and you see how it's performing. So these apps like Grow, Zerodha, or India, they will tell you. They show you actually a trend will be there. So it is easy to. Initially it might be difficult, but then late the more you start looking at it and start asking questions, what is it telling me? And then you will able to understand this. Another way of doing it also, like you can go to any of the AIs. There are AIs available like chat GPT or open AIs and all, where you can go and tell your, without disclosing a lot of your personal information, you can go and tell, this is the amount I have, this is what I'm looking at, this is my goals, where can I invest? And they will also guide you to go to which different apps and tell you the what you call, they will also, you'll have to, prompt has to be so good that it shows you a comparison and give an amount also, so that you can see different comparison in front of you. There are calculators available. There are a lot of people like one person club, like or Richa Ranades, who's also CA, who does a lot of YouTube channels, YouTube videos in the channels. So her channel also updates with a lot of information. So in case you're stuck somewhere, you need more clarity or in-depth knowledge, you can refer to these, who will take you to the very basics and you can learn it in your own pace as well. That's what I would say. And for me, what you were asking me, yeah, the best is the $500. You start with that. Second is Nifty 50s. Two things which I generally tell a beginner who wants to get into this investment thing of mutual funds.
Smita, I think we talked a lot, and there are many ladies are many young ladies or beautiful ladies are with us, and I like their questions if they have any questions in their mind, if they have any question or questions in their mind, or they would like to share any of their experience or share anything with us. We are happy to learn on this.
So somebody has a question here that is it same as RD? No, it's not same as RD. RD is always post office or bank. It's not it's little different from RD. But if you stop RD, what happens is there is a fee which is there. I think there's a penalty if you withdraw early.
Yes, there
That's
is
what.
a penalty. Besides that, RD is relatively fetching lower return and mutual fund is fetching more return because RD recurring deposits are managed by the banks, which they relatively offer lower return, and the mutual funds because they are managed by the specific fund managers and they have the expertise over this. And as per the past trends and all this, mutual funds bring more results, more returns as compared to FD. And
So
mutual,
I
sorry,
yeah. Yeah. Carry on. Yeah.
no, no, carry on, carry on.
So what
Please.
I'll tell you, in case you in case you want to understand SIP compared to RD, you can give up. What I'll say is you can go and check in where the AI or calculators are available, where you want to invest something as an SIP in a particular mutual fund and an RD for a particular tenure. So you will see the differences. So the one is your lower returns. One you will say that it is for a specific tenure, and mutual fund is not for a specific tenure. You can do it for as long as you want to. And and only when you redeem and what time you're redeeming, it all depends the loss or gain which you get from the mutual fund. But in RD, if you will only get the limited one. And also there's a flexibility of putting in equity, debt and all. Here it is all fixed. In RD is all fixed by the bank basically. I hope I answered the question which you had.
Sounds good. SIP compared. Okay.
So
Yes,
in a way, I will say RD is like savings, and it will protect your fund, and it will give you a little bit of extra money of what you're putting in. But mutual fund is growing your money to the next level because the rate of interest is higher. Because risk you are taking a higher risk, so normally the rate of interest will also be higher. Rate of return based. Yeah. Uh, Another thing, interesting thing I want to check with you is that you can anybody go and start with an SIP? What do you think? It's a very basic question I'm asking, but
like yes, anybody needs anybody who has money to invest, even the small amount, 500. The two things, basic things are required. The two things are required. The one is the bank account and a PAN number. If you have these two things, then anybody, if a working woman, housemaker, or any person who has that two basic things can start investing in mutual funds. And of course, before investing, just Smita told that where we can go, just like a bank account, if you don't have even the expertise, you can check with someone over the net. And through your banking itself, you can start investing. Smita, just sometimes people may be confused that they should go for SIP or they should put amount lump sum. So if anyone has this question in mind, or like a few people ask this question generally to me that should I invest in lump sum in one go or should I invest through SIP, which is beneficial. So
mm,
anyone if have experience, then Smita.
so which it's not that the one thing is better or the other is better. It's upon what money you have with yourself because even if you deposit by SIP, it's like small. small daily wins, which we say, and lump sum is together you're putting the money. So always compare yours, whatever you want to put in. If, for example, you're putting in a mutual fund or an FD, compare what is giving you the more interest. There are calculators available. There are no calculators you can find. You can go even go to a chat GPT, tell your requirement, exact requirements, then calculate it. It will give you a reason. And then you can get it verified from anybody as well, but or the bank as well, that what is it. So always ask for a comparative. Don't go by anybody telling you that this is giving you this return, or what is it. So for example, especially senior citizen all, there are extra interest which comes in for FDs and other things. They have normally 0.25 and 0.75 extra than the normal people. So properly they will prefer safety, non-risky, all of those things. So it all depends upon your risk appetite, when do you need the money and all of those things. Because the you have to look at the exit also. If you invest a huge amount of money in, for example, mutual fund, and then you want to withdraw it, so you have to check the short term capital gain also. They can have a capital gain impact also. So invest in such a way that it's a for long term. Don't look at it from a very short term. At least that is should be kept in mind. So for an FD also, you can do it for 180 days, 130 days. Similarly, when you're doing it, plan your investment in a such a way that it gives you higher returns. So comparative analysis is very important for what you're doing. It's for example, it's not for easy money. Mutual fund is not for easy money. It's making your money grow over a period of time. And if you have a specific goal, according to that.
Align, Smita, but yes, I would absolutely align with you. Just want to add one point, and it also depends the money in hand available. For example, I get a performance bonus or an interim bonus during the year from a company. I can invest in lump sum in one go, keeping that the market is stable. But when I'm just getting the limited salary, I can invest only a certain amount, not the big amount in one go. So depending upon the fund availability also, it depends. Rest, you just mentioned that need to make a comparative analysis. Right.
What I will tell you is that there might be, that's because of the tax impact also, I'm saying. That's why.
Yes, 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 absolutely.
So in case you're in the old tax regime, you have interest, that TTBs, that 10,000 reduction is available. But if you're in new tax regime, you are getting that benefit. So probably those things are that needs to be taken care also. So normally when we do this, people like senior citizens, they always live on just interest income because it's very easy to go and do it because they get the money easily from the bank. But so I'm not saying put all your funds in one bucket of mutual fund, distribute it like FD, liquid funds or major funds long year wise basis. For example, you can invest something in the equity for 10 years and something for 5 years. It is there. You can put it in debt, you can put it in hybrid, or you can put it in Nifty 50, or you can put it very, very liquid funds or something like that, or RD or FD. All has its own advantage. It depends upon what your goals are. According to that, map it accordingly. Like you've seen a thali, when we eat lunch, there are different thalis of the thing. It's better to put in different this thing. So if you don't need something for a longer time, then put it away for a longer time. And if you need something very, very quickly, very immediately, put it there. So always check there is no penalty, because if you, even for FD also, if you withdraw certain time, there is a penalty clause to it also. So make sure that you are not giving away money to the bank unnecessarily.
Yes. So just to discuss that we need to put different things depending what we needed. This is what our next topic is. Mutual funds and SIP. That's mutual SIP is a part of mutual fund only. And what are the different routes through which we can make our flutter, make our portfolio? This we will cover in the upcoming session. That's besides mutual fund and SIP, what are other options of investing. So that's the next topic, but not revealing all the things. But this is the thing we will cover. And before we wrap up, I would ask once again. Yes, Lalima ji has raised her hand. Yes, Lalima ji, please unmute yourself and.
Ma'am, you had telling something about apps which can calculate 50/50 is an app or what? AI?
So if you go to Chat GPT AI, so that also if you give your info instruction correctly, so it's a prompt based AI. So if you give a instruction correctly, you can get your answers there. What without giving mother personal details, the amount wise details. If you give and do a comparative, it will give you in a table way whatever you're looking for comparison. Whether it's an FD is better, RD is better, or a mutual fund is there.
So you
Similarly,
are, yeah,
yeah.
okay. So what 50/50? What you are
Nifty
telling?
50. So Nifty 50 is an index fund.
Index fund.
So it's
Okay,
an
okay,
so index fund Nifty 50. How it works is like the investment happens in the top 50 Indian companies. So
okay, okay.
it will always be growing. It is very less. You'll say it is coming down. It is always on a growing up because even one of the companies not doing, all the other remaining 49 will be doing good. Something will do good, something will do bad. So your money will not always grow only. It will not come down much. So that's why it's a
Okay, okay,
safe bet to do it. So it's called the 50 companies of the which has of the Nifty. So that's why it's called
okay,
Nifty
okay.
50. UTI has
Nifty.
it, HDFC has it, Axis Bank has it. Lot of banks has this Nifty 50.
Okay. Ma'am, is there any app which can tell you that where you are supposed to invest? Because some people used to tell that they will guide you where you are supposed to invest your money. Some AI product has launched which can guide you regarding you where you should invest. They will automatically compare and tell.
So there are like stocks and all. There are AIs which give you that stock, but I'm not very comfortable with those things because I'm not very familiar with this new technology of stock, where to invest and all with the AI. So I prefer going to these platforms like Grow, ET Money, or in what you call this Indie Money. All of this has their own what you call. They also have a dashboard which tells you
Yeah.
the growth of the funds. You can compare there as well. And also there are various calculators available in the what you call, if you go in the Google and search ET Money or anywhere, you will get calculators of for HRA, for if you put a mutual fund, this particular mutual fund with this amount, what will be the return, when is to withdraw the money. All those kind of different calculators are available. Different wealth companies or are doing it, wealth apps are doing it. So you can go and compare it. So always make a comparison and take a judgment accordingly. Do your research. Due diligence research is required. Don't go by just one person telling you in the bank to go and do it or us telling you to do it. You compare and see the funds for yourself, whether it's RD, whether it's FD, whether it's mutual fund, whatever you want to invest in.
So, will you teach us how to invest? Like, are you going to give us a demo? Like, look, now this is the at 9:30. This Nifty is opened, and now you can see the graph, and like this, you are
So
supposed to invest.
So no, we are not going to give you a demo of any of those things because we are here only to give you a to walk you through what are the awareness, getting an awareness and the calls to do this. If a demand comes and people want to learn all of those things, we can also do that, but in a very separate session. That's why in the beginning of today's session, I was asking Deepthi that can we do a webinar or a workshop wherein you can actually show these platforms and show how this dashboard is available. So maybe the way I want to invest and the way Poonam wants to invest and the way you want to invest is very different. So I'm a traveler. I love traveling. So I do things on a way in a way that when I'm traveling, I get my funds. I can get my funds whenever I need it, and also at a longer term, my fund is also growing. That's my need. So her need might be different. Your need might be different. So my
Yeah,
mother is a
yeah,
senior.
yeah,
So,
yeah.
so yeah.
But actually, since you are a CA, you definitely know, and you can teach financial
Yeah.
literacy to all the women because they are all only aware and know कि ठीक है पैसा बच गया तो कुछ सोना खरीद लो. They like this because generally they don't go for nifty and mutual funds, and they all know about this FD kara lo, RD kara lo, and because in India people are not so much financially literate. So
Absolutely.
yeah, so since you people are so rich in finance, so this your knowledge should also be flown to all others, that they can also know about how to see this, because you have to observe for 3 4 months. You have to understand all these ups and downs, then only you can go for investment.
Yeah, so we'll do that.
Otherwise
If if a
everyone
need
is
is there. Yeah.
yes. So it is my humble request to take financial literacy session for women especially, so that the investment regarding mutual funds, and the at the bottom line, everyone is scared कि भाई कुछ गड़बड़ ना हो जाए. So unless and until you are literate, you can't go for mutual
Yeah.
funds and all. You have to be aware of all these things. So if you take a literacy session like session 1, and give like live demo of all this, like look, Nifty is going up here. Now you have to analyze, because you people only understand all these things, na?
Yeah, yeah, we
So
can
your
sure.
knowledge should be
Yeah, yeah, we can do.
channelized.
What about what are your thoughts, Poonam? We can do that, right? And we, probably when a demand is there, we can do it. So we've got half an hour slot so far. So we thought that in this half an hour slot, the maximum awareness we can create, we'll give it off. And if any practical things come up as a feedback for us, we'll definitely pick it up in the next series of sessions,
Yeah,
basically.
yeah, definitely. So that's why I am boosting you,
Yeah,
that
yeah, sure, sure.
financial literacy, it should be your knowledge should be channelized, and when everyone will get that interest and benefit, they will also say कि ma'am has taught us, अभी इतना पैसा बन गया, तो you will
Yeah,
be,
yeah.
Yes,
we will be
definitely.
thankful to you only. Thank you
Very-
so much.
Surely,
Yeah,
Lam,
sure, sure, sure.
after this
Uh,
series, which I planned already,
मैम, योर वॉइस इज नॉट एट ऑल ऑडिबल, मुझे बहुत कम सुनाई दिया आपका.
from
तो इसलिए मैं कुछ ज्यादा समझ नहीं पाई आपकी बात, बिकॉज मुझे आपकी आवाज नहीं आ रही थी.
thank you so
आई
much
हैड
for this.
गिवन चैट. आई विल हियर योर रिकॉर्डिंग्स. बहुत अच्छे से कान लगा के सुनना पड़ेगा अगर आवाज आई तो, बिकॉज इन लाइव सेशन इट वाज नॉट वेरी क्लियर, मतलब साउंड इशू था. ठीक
Okay,
है.
yeah,
thanks.
yeah, sure, sure. We'll take so next time ke liye we'll definitely take care of the sound thing.
या थैंक यू मैम, थैंक यू सो मच.
Yeah, yeah. So Srividya wanted my ID. So this is my LinkedIn profile. So for in HerKey, so Poonam's profile is there. My profile is there. Poonam, is your LinkedIn profile updated?
No, can contact me on my HerKey profile.
Yeah. So Lalima ji, I'll also tell you that there are few people who can whose videos you can follow. By the time we come up with our sessions, there are a couple of people. That is Richa Ranade is there, whose videos are very very nice videos. We also look at
ओके.
their videos. Very
Rachna Ranade.
simple. Rachna Ranade, sorry, Rachna Ranade. Her videos are very simple and very layman's language. She's explained in Hindi and Marathi and English and all. So you can actually listen to it also by the time we come up with a practical demo.
ओके ओके. श्योर श्योर.
Yeah.
थैंक यू मैम. बाय
Yeah.
बाय.
Bye bye. Thanks. Thanks everybody for all your inputs, basically. And Srividya is also asking about your HerKey, right? So you can look at her ID as Poonam. This is her name and full name. So if you search for her name here, you will definitely get it, Srividya. So I hope this session was useful to all of you. And if you have questions, do let us know. We will take this feedback of conducting the practical demos probably in the next series of sessions here. Yeah, let's wind up then, Poonam. Yeah,
Yeah,
we are wrapping it up for today. See you on Monday with another topic of the investments which are not mutual fund, but PPF, ELSs, and right. And what else are we talking about?
FDs, RDs, all this.
FD, that is it. Cool. Thanks. Thanks, everyone. Bye. Enjoy
Thanks,
your week.
everyone. Have a great time. Bye bye.